Silver's next target, 106. You just saw it happen. Silver didn't just rise this week. It ripped right through the $90 zone, then plummeted so fast that anyone watching felt their heart sink. But here's the crazy part. That huge dip, it wasn't the end of the move. The real question everyone's asking now is silver about to climb even higher, or has it already hit its peak? Stick with me, because the next price target being whispered around isn't 95, it's not even $100, it's $100. Before we dive in, quick reality check. I'm running a campaign to push out copycat channels. If you value original content, hit subscribe and drop a comment saying OG John AG Fro. Let's make sure the algorithm knows who we're supporting. All right, let's break this down. What happened in the last few days goes far beyond just a number on a chart. This is bigger, and there's one specific behavior you need to watch if you want to figure out whether this rally is the start of something huge or if it's just the final blow off top. The real story behind silver's rise. So, what exactly happened here? Silver's price action has been building pressure for a while, but this week, 2025 lit the fuse. Momentum came in hard. Volume spiked, and just like that, silver went from being a topic of casual conversation to something people were chasing. Suddenly, people who never cared about metals were asking, where do I buy? People who used to mock silver are now saying, wait, did I miss it? And that's the dangerous environment we're in right now. Charts don't care about your feelings. They don't care about your favorite influencer or political stance. They care about one thing, price. And when price accelerates like this, certain technical tools start repeating more often than most want to admit. One of those tools is the Fibonacci extension. Now, I know some of you might roll your eyes at the mention of Fibonacci, but listen. This isn't about magic or astrology. It's about a method for measuring how markets typically expand after a strong impulse move and where they're likely to hit resistance when the crowd gets greedy. Here's where it gets interesting. The first key level everyone's eyeing right now, the 61.8% Fibonacci extension, the golden ratio. It's a zone that often acts like a speed bump, creating volatility that shakes out weak hands. We just saw it in action. A sharp push into that zone, a nasty drop, then a gap down, and just as quickly, buyers stepped back in and drove silver right back up. That's not bearish behavior. No, that's the market testing weak hands and figuring out who's really committed. And when a market does that, like drops hard, scares everyone, then recovers, and it's usually preparing for the next leg up. The key to understanding silver's next move. Now, let's talk about where this could be headed next. After that test of the 61.8% extension, silver's not slowing down. The next big number everyone's watching is the 100% measured move, the full Fibonacci extension. This is where people are starting to look at silver like it's hitting the finish line. That target, roughly $106, from where silver is trading right now, that's a huge percentage move. And in silver terms, it can happen faster than you think. You've already seen it. Days where silver's range from high to low in a single session felt downright insane. We're talking about 15% swings in one day. That's not your average market. That's a stallion market. A market that can make you money fast and punish you just as quickly. And here's where it gets real. As price rises, exchanges start raising margin requirements. They do this to protect themselves, to reduce risk in the system. But the result? Leverage gets squeezed out. People who've been riding this wave on borrowed money get hit with margin calls. They're forced to sell. And that selling can create violent, sudden drops that make everyone think the rally's over. But it's not. Notice what's missing. The people selling into strength right now aren't necessarily bearish. They're locking in gains. They're trimming portfolios that are too silver heavy. And that's a normal, healthy move. But when too many people sell too quickly, you start to get that FOMO effect. And that's exactly where we could see silver hit that $106 target and trigger something big. Imagine this. You sold at $90 feeling like a genius. But now silver's sitting at $97. You're a little uncomfortable. Then it hits $102. You're getting annoyed. Then it touches $106. And suddenly you're not thinking logically anymore. You're thinking, I have to get back in. That's the psychology of FOMO. And when FOMO shows up near a key target, that often marks a turning point. It doesn't always signal a crash. Sometimes it's just a long, frustrating consolidation where price moves sideways, eating away at the impatient ones. But either way, that moment matters. So if you're wondering what the next big number is, it's $106. And that's where the real game begins, the escalation. What happens after 106? So what happens when silver hits 106? The market psychology is about to change. And when that happens, it's not always pretty. You've seen it before. A huge rally followed by a sharp correction. A lot of people get complacent at targets like $106. They think they've made it, and that's when the market can pull the rug out from under them. But this time, silver could be setting up for something different, or something very familiar. We've been here before. Think back to 1980 or 2011. Silver surged, and then boom! It wasn't a calm, smooth pullback. It was ugly, a 50% to 70% drop from the highs. And that's not some scare tactic I'm throwing at you. It's history. Silver has a history of wild moves like this. And it doesn't matter if you think this time is different. When silver hits these parabolic levels, mean reversion isn't just possible, it's likely. So here's where you need to be really careful. Let's say silver hits 106. A 50% pullback from there would put silver back down around $53. A 60% pullback, that brings it down to about $40. That's territory you don't want to ignore. It's not a prediction, but it's a possibility. If you've been riding this silver wave up, you need an exit plan. Not because I think silver is doomed, but because, frankly, time is money. If you go all in on a parabolic move, ride it to the top, then ride it all the way back down, you might spend years waiting to get back to even. And that's a lesson you can't buy back. Now, it's not about panicking. It's about managing the risk, trimming your position as silver gets too hot, rebalancing your portfolio, and making sure you're prepared for whatever happens next. Because if silver pulls back and proves it still has legs to run, you can always re-enter. But you can't buy back your time. The ticking time bomb, what's coming next? But here's where it gets even more interesting. As silver surges, gold and platinum are quietly doing their thing, and if you're just focused on silver, you might be missing a bigger picture. Gold has been the steady player in this whole metals rally. It's not flashy like silver, no 15% intraday moves, but that's exactly why it's dangerous. Gold is the global fear gauge, and when things go sideways, that's where big money hides. Gold has its own target zone somewhere in the low $5,000, around $5,170 to $5,200. It's not the 100% move that silver's aiming for, but in gold terms, that's significant. Here's the kicker. Gold doesn't get a pass when the markets turn. In fact, in a major risk-off event, gold can drop hard, as much as 25% to 35%. Don't mistake gold for a safe haven when the leverage unwinds. Everything takes a hit when panic sets in. So once again, we're back to the same principle. Follow the trend, but always have a plan for the downside. And then there's platinum. This one's sneaking up on people. It doubled last year, and using the same measured move thinking, we're seeing a target zone pop up around $3,600. That's a solid percentage gain from current levels. And in a metals-driven rally, when multiple metals are running together like this, we could see platinum make a move that's almost as big as silver's. But and here's the crucial part, not every metal is clean right now. Some are choppy, others have suffered more from past sell-offs. But right now, if you're asking me which metals have the cleanest trends, here's the rank order. Gold comes in at number 1 for stability, silver's number 2 for upside potential, but with a lot more risk, and platinum takes 3rd if it confirms. The point? The metal space is a rotating game. Money chases momentum, and when one metal gets too hot, that's when the money starts spilling into the others. So don't just watch silver. If you want to see where the next big move is, keep an eye on the full picture. The mini crisis stack, things are about to get wild. Now, let's stack a few more developments on top of this. Things are starting to move fast, and it's about to get even more chaotic. First, there's the issue of profit taking. Dealers are seeing more selling into strength, not because everyone's turning bearish, but because some people are sitting on massive gains they never expected. That's the kind of pressure that can lead to a psychological trap. You see, when something skyrockets, portfolios start to get out of balance. If you owned a ton of silver, you might wake up and realize it's now most of your portfolio. So what do people do? They trim, rebalance, lock in profits. And while that's rational, it also sets the stage for something bigger. Then there's the added pressure of margin calls. Exchanges raise margin requirements as price rises. Why? To protect themselves. But for you, it forces out leverage. And when people who were riding on borrowed money get margin called, they have to sell. And that selling can create violent, sudden drops that make everyone panic, thinking the rally's over. But the reality is, it's just the market doing what it does, shaking out weak hands, testing who actually wants to own silver. This is where we're heading. The momentum's building, but there's a point where it flips. So what happens if this continues? If silver hits $106 and then goes through another round of volatility, what if the dip starts pulling in more buyers who are chasing the next wave? That's when things get tricky. And here's what you need to know, that this is the moment you need to be extra sharp. The game can shift quickly, and if you're not watching the signs, like volume, price action, and how buyers react at key levels, you could get swept up in the chaos. The human impact. How this affects you now, let's talk about you. Yes, you, the person watching this. You might be looking at silver's rise and wondering, how does this actually affect me? What does this mean in my life? This isn't just about charts. This is about real people making real decisions and real consequences. Silver's not moving in a vacuum. It's moving in a world where money is nervous, headlines are loud, and the crowd is getting emotional. And that emotional energy is where fortunes are made and lost. If you've been riding this rally, you might be feeling a rush of adrenaline every time silver hits a new high. But let's be clear, that's the same feeling that drives people to make bad decisions when things get volatile. This isn't just about making money in the markets. This is about psychology. People who feel like they're missing out get desperate, and that desperation can make them act impulsively. But here's what nobody wants to admit. The people who don't panic during the dips, who stay calm, are often the ones who come out ahead in the long run. So when silver hits $106, are you going to let FOMO take over? Are you going to sell too soon or buy in too late, chasing the next big spike? Or are you going to hold steady, take a step back, and realize that the only thing that really matters is managing risk? If this feels familiar, if you've experienced those roller coaster emotions of chasing a big move, or if you're starting to get that nervous feeling in your gut as silver pushes higher, then drop a comment and share your experience. The truth is, most people don't plan for the emotional side of trading, but you have the power to change that. The systemic insight, the mechanism behind it all now. Let's go beyond the headlines and dig into the deeper forces at play here. Yes, silver's soaring right now, but what's really driving this? The charts tell one story, but the underlying mechanics are far more unsettling. You see, silver's price action isn't just the result of market demand. It's happening in a world where leverage, fear, and the desire for certainty are shaping everything. People are looking for safety, and metals like silver, gold, and platinum are some of the few places where people think they can find it. But here's the catch. The only certainty in markets is change, and that change can come fast. When prices rise quickly, it's a signal that fear and greed are both in play. People are buying because they're afraid of missing out, but they're also buying because everyone else is buying. It's a feedback loop that accelerates the move. But when that happens, something else is happening underneath. The system is being leveraged. Margin calls, profit taking, and the emotional behavior of traders all create a dangerous environment where price swings become more extreme. This is where the real risk lies. As price accelerates, so does the leverage. And leverage is a double-edged sword. It gives people more power to make big moves, but it also amplifies the downside risk. That's why the best traders are not just watching price, they're watching the structure. They're paying attention to whether the market is being driven by real demand or if it's being pushed by emotion and leverage. That's the mechanism behind the madness. The market doesn't just move because of silver's supply and demand. It moves because of human psychology, leverage, and the need for certainty in an uncertain world. The near future trajectory, 2 paths forward. So what's next? Where do we go from here? The truth is, nobody really knows, but we can look at 2 potential paths that silver might take after hitting that $106 target. Path 1 is the bullish scenario, consolidation before another push higher. Silver hits 106, takes a breath, and then builds a solid base. After that, it could move toward even higher targets, maybe 120, 125 or more. In this case, $106 isn't the end. It's simply an intermission, a pause before the next big move up. But then there's path 2, the topping behavior. Silver hits 106, forms a topping pattern, then breaks down and starts pulling back. Possibly hard. We've seen this before with silver. These parabolic moves often get followed by brutal mean reversion. And if that happens, it's not because silver's done for. It's just the market doing what it does, correcting sharply before it moves again. So what's it going to be? Will we see a strong consolidation before higher highs, or are we looking at a pullback that could take silver down by 50% or more from its peak? The key here is uncertainty. Both paths are possible, but the next move is already forming, and how silver behaves at that $106 level will tell us a lot about which direction it's heading. The closing thought? What's your next move? Here's the thing you need to walk away with. Silver's price isn't just a number on a screen, it's a story. And that story doesn't end at $106. In fact, it's just getting started. But here's the big takeaway. No matter what happens, the key to surviving this rally is managing your risk. If you're going all in, be prepared to ride the wild ups and downs. If you're trimming your position, stay disciplined and stick to your plan. Whether silver hits $106 and continues climbing, or it tanks after hitting that target, the game isn't over. You have a choice. You can be the person who chases every swing, who gets caught up in the noise, or you can be the person who watches the structure, stays calm, and makes decisions based on facts, not emotion. The crowd may cheer when silver hits $106, but the smart money will be watching how it behaves after that. And if you're wondering what to do with this information, it's simple. Follow the trend, stay sharp, and always have an exit plan. Because at the end of the day, it's not about predicting the future. It's about being prepared for whatever comes next. Now, before you go, here's one last thing. If you haven't already, subscribe, because this market is moving fast, and I'll be here with the analysis to keep you ahead of the curve. And remember, if you're holding silver, gold, or any asset, always keep in mind why you're in it. Be ready for the volatility and plan for the pain. So tell me in the comments, are you riding this silver move all the way up? Are you trimming your position, or are you waiting for the pullback? Drop your thoughts below. And if you've got a win in your life, silver or not, share it. We're all in this together, and hearing your success stories keeps the whole community's morale high. All right, I'm John A.G. Thanks for tuning in, and I'll see you in the next video.